Welcome, everyone. We're excited that you've joined us for the Digital Assets, Derivatives, and DeFi panel of LabCFTC's Empower Innovation. My name is Shivon Kershaw, and I am pleased to introduce our esteemed panelists of accomplished women and thought leaders on what's next and what's new in digital assets, derivatives, and DeFi. First, we have Sidney Swan, General Counsel of Gemini, and an early adopter of crypto technology and former fintech startup executive with extensive experience in partnering with regulators on bridging services between the future of money and conventional instruments. Sidney, good morning.
Good morning. Thanks for having me.
No problem. Next, we have Sunena Tuteja, Managing Director and Head of Digital Assets and DLT TD Ameritrade, an industry leader in bringing Wall Street to Main Street, advocating for client interests in crypto markets and in safe, secure, and sound ways that empower TD's clientele. Sunena, we love that Main Street model. Good morning and welcome.
Thank you so much. Delighted to be here with this Power panel and looking forward to an engaging conversation.
Fantastic. I love that too. I'm going to steal that phrase, Power panel. Next, we have Julie Winkler, who has served as Chief Commercial Officer of CME Group since 2016 and leads teams in sales, product marketing, research and product development, data analytics, and digitization functions, as well as an international innovation lab. Julie, I'm surprised you had time to add one more thing to your plate. Thank you for joining us.
Well, thanks so much for having me. What a great day the LabCFTC has put together. So really looking forward to this discussion.
Great, me too. You know, accessibility has been the mantra of digital assets since its inception. And we're finding more and more examples of how financial instruments that lean in towards that approach, it's proving to be the preferred choice for market participants. And traditionally speaking, centralized systems and human gatekeepers has been the norm for everyday payment transactions. But what's novel about what we're seeing in digital asset space and specifically in decentralized finance is that it takes the innovation of DLT and blockchain a step further, extending beyond simple transactions and really becoming an inclusive platform for complex financial instruments like derivative products and use cases like decentralized exchanges, yield farming, crowdfunding, and even predictive markets, all with smart contracts at the core. And I like to think of it as power to the platform, right? A way of seeing instant innovation without interference. And so, Sidney, I'd like to start with you. It seems most appropriate to start with the title of this panel, Digital Assets, Derivatives, and DeFi. That seems to be a term today that's talking about anything from cryptocurrencies to stablecoin. Why is that, and why is it so critical for us to talk about these topics now at a Future of Digital Finance discussion? Could you tell us more from a technical standpoint? What is so innovative about this tech, especially from a trading and markets perspective?
Absolutely. Thank you again, Shivon, and the LabCFTC for inviting me to speak on this. I love that phrase, Power Panel, to talk about these topics. It's just an incredibly interesting and dynamic time for financial markets and services right now. And I would suggest that at its core, what digital assets are and what cryptography, blockchain, and tokenization, which are really the core of digital assets, represent is, sort of, as you said earlier, the ability to transact financial instruments in a new, more efficient and sort of more accessible way. That's the thesis. And specifically, the ability to send a financial instrument, whether that's money, a commodity, a security, something else altogether, to another person or another entity in this largely decentralized way through new transaction rails, which is what this technology potentially unlocks for us, can reduce costs and increase access to markets and drive sort of automation where things had previously not been automated and unlock new business model opportunities. So that's sort of the high level, at least as I see it, of the innovation around this tech. And we're just beginning to scratch the surface when it comes to the impact of these technologies on the financial markets and the intermediaries. And if we harness these, and I think all of us on the panel are working towards harnessing these technologies in a compliant way through accepted regulatory frameworks, as much as possible. And sometimes that requires, pushing on those frameworks or working with regulators such as the CFTC within those frameworks, we can start bringing those benefits to market participants and end users. So that's kind of the high level. Then DeFi, I think, is the most interesting, at this moment. And crypto, I think when we were all speaking before this panel, we were sort of talking both with excitement and also lamenting how quickly digital assets in the crypto space moves. Just when you think you've got a handle on it, there's something new that pops up, which is fantastic and exciting, but also sort of exhausting and trying to be in the industry. And I think sort of the newest piece that I've been spending a lot of time thinking about is DeFi. And people talk about different things when they talk about DeFi, and stands for decentralized finance. That can be lots of things. I think one of the most interesting sort of applications of it that we've had our eye on is the way in which DeFi is enabling sort of decentralized exchanges. And we all come from centralized exchanges, but it's fascinating how blockchain technology, specifically smart contracts, can enable decentralized exchanges and other types of financial transactions that would historically have required an intermediary, would historically have required a bank or a bank-like structure to facilitate them. And I'll spend just 2 seconds on DeFi because we could spend the entire panel on DeFi, and there's all sorts of interesting things to talk about. But, it's really sort of eye-opening for me to think about how there are decentralized exchanges now, some of whom are operating here in the U.S. and are doing so, with an eye towards being regulated, that are using smart contracts. And I think, everybody knows, but just to reiterate, the smart contracts are software programmed to execute one or more transactions when certain conditions are met. They're actually using smart contracts and algorithms to do the matching and a matching engine that had historically been done by a centralized exchange. And this isn't by itself a new concept. There were DEXs like Ether Delta that launched back in 2016. It was a long time ago for crypto. And this isn't new, but there's this new concept of automated market makers, which are algorithms, essentially computer programs built using smart contracts that automatically balance supply and demand to match orders, buyers and sellers, and effectuate transactions without really a centralized, central limit order book, which as a member of management of a centralized exchange, albeit a crypto exchange, is so fascinating to me. All of these trades are executed on-chain using smart contracts. They're actually coded into the blockchain as opposed to being managed and reflected on the ledger of a centralized exchange, which is the way that this has always been done. So there's also regulatory and technical and all sorts of questions that this raises, but it's really interesting in that it does have the potential, if you take a bunch of steps back, has the potential to really kind of democratize and create access to trading in markets that didn't exist before this technology came to be.
Wow. And so that helps me really segue to Nina. And I've got a loaded question. If anyone can handle it, I know it's TD Ameritrade, right? So why are we seeing the increase in interest in digital assets? Where is this demand coming from? What are the benefits for institutions and clients to following a trend that appears so novel and so unknown?
Yeah, no, that's definitely a good question. So, maybe kind of rewinding back a few years and giving context to what we're seeing today, especially on an amazing day where Bitcoin has, crossed through another milestone in terms of pricing. Definitely, an exciting day for that. I've spent the majority of my career, I would say, at the nexus of finance, technology, and policy, but always with this underlying obsession of how do we tap into frontier technologies like AI and machine learning and blockchain, to name a few, but do it in a way that, we're breaking down barriers so that mainstream consumers can engage with financial services with kind of more confidence and really take charge of their financial freedom, right? And I think that context is important because that really was our mental model in about 2016, when as an organization, we really started to take a look at blockchain, the technology, but also Bitcoin, the asset class. It was kind of a renegade and a contrarian view for a Wall Street incumbent to kind of come out and say, yes, we embrace blockchain, the technology, but we also embrace Bitcoin, the asset class. Fast forward to 2020, and that perspective is more mainstream amongst institutions, which I think kind of shows the progress of the ecosystem. But, that mental model is critical because whether we're looking at harnessing blockchain or commercializing Bitcoin, what we've always tried to maintain is it has to be anchored in the notion of, one, what is the problem we're trying to solve? Why is that problem worth solving? And why are we in this technology or asset class uniquely qualified to solve that problem? So that, mission of solving a problem is critical. But the second thing that's really core to us leaning into this is really looking at it from the client's eyes, right? And those two guardrails are important because it ensures that, you're going about it in a way that's purposeful and pragmatic and prudent versus, kind of blockchain theater or, chasing shiny object syndrome. And trust me, I'm as guilty as that as anybody else, right? So, with those guardrails in place, when we started to look at, we'll talk about blockchain as a technology and kind of the virtues it can bring about in kind of improving capital markets and creating new markets, but specifically in digital assets, one of the first things we did was kind of reach out to the client and listen to, as I say, the voice of the client. Through our many platforms, we have the privilege of engaging with our clients directly on a daily basis. So one of the first things we did, and this was, a couple of years ago, was on our platform, we kind of asked a simple question, are you interested in digital assets? Are you trading digital assets? Do you want to learn about digital assets? And I figured, listen, if 100 people answer it, amazing, further bolsters our business case, but we were overwhelmed with the persistent and consistent client response and feedback that we received and we continue to receive in terms of their appetite for education, wanting to learn about this, but also wanting to unlock, new on-ramps and instruments that gives them options to engage with this asset class, but do it in a way that's analogous to what they're accustomed to with traditional assets, right? They want, they don't want it that different. They want the experience to resonate and be relevant to what they're already doing. So, so that's kind of what, how the journey for us started. And I would say that interest, both for education and access to digital assets, has only compounded over the years, with 2020 kind of coming up as another peak year, given the confluence of macroeconomic conditions. And, one of the things I will say about the clients we serve, and for clarity, the clients we myopically focus on are the individual investors and the RIA community. I know there's a lot of great work happening from an institution's perspective and onboarding institutions to digital assets, but our focus is really about how do we bring Main Street investors and the RIAs into this ecosystem. And one thing we've learned that's different about these market participants is they're coming into digital assets with more of a pragmatic need and a pragmatic appetite. And what I mean by that is, they may or may not care about the technology or the ideology, but what they're really looking for is a form of diversification, a hedge against inflation, potential asset allocation. And that's important to understand because it informs your product roadmap and your user experience. And last thing I'll just say, which has been a key catalyst for us, has really been starting with education, right? We know even with traditional investing, education is the silver bullet. And we have facts and data over the years to show that an educated investor is a more confident and empowered and long-term investor. And we believe that when it comes to digital assets, education is even more paramount, just given the nascency and perceived complexity of this asset class. So we've really spent a lot of time in terms of educating our clients, but doing it in a way that's in kitchen English, kind of stripping away the unnecessary lexicon and really, educating them about this asset class in a way that's relevant to them. And, so for our clients, whether they span the spectrum of crypto savvy or crypto curious or crypto skeptic, we want to meet them where they are and kind of help meet those demands from an education perspective or, their ability to access this asset class through a variety of instruments.
Yeah. And it's clear Sanina's been looking at my notes because I do have questions about the education piece. I know that plays an important role. Julie, one key challenge I would imagine exchanges contend with is this need to manage conflicting priorities like market growth, competition, even safety in the marketplace, and balance that with innovation. Can you elaborate on strategies and approaches CME has taken to address growth, particularly around innovative products like digital assets?
Sure, I'd be happy to. For us at CME Group, I think innovation has really just been a huge part of our history. We've had a lot of great firsts as we've introduced exchange-traded derivatives over the last 170 years. And yet, we found, as I'm sure my fellow panelists will attest, you can't kind of sit on your laurels and pat yourself on the back. You have to continue to keep pushing that innovation throughout the company. One thing that we've taken is really this kind of design thinking approach, which similar to the experience at TD Ameritrade for us, that was really about putting the client in the center of the product development process, and that voice of the customer that was spoken about earlier was a critical part for us. We started with really a grassroots effort in our innovation lab at CME back in 2015, and I'd say, that was a lot of people's just personal interest at the time, and them trying to say, where might the financial industry be going? How might some of the capabilities that we have in exchange, apply to that? And as we looked through that and thought about the customer, it became clear to us that, product design was going to be a key part of this. How we actually settled a contract, if we were to be introducing a contract, was going to be a key part. And so that's really where we, started a little more upstream than we normally would have in introducing the reference rate that for Bitcoin that we did with crypto facilities. And that really kind of was our first message to the market of saying, we think that there's something here. And yes, this is a new asset class, but this is our way to say we really think having a reliable and dependable benchmark is a key part of, really price discovery and making futures markets work. So we launched that back in 2016, and, that helped provide some additional transparency to the spot Bitcoin market. We're excited then to bring the Bitcoin futures contract launch just about a year later in December of 2017. And then just this year, we brought the Bitcoin options to market. So from our perspective and a lot of what we heard from our clients was a need from the institutional side, really addressing a lot of the things that we talked about earlier, right? They wanted to understand how this could be used as an asset allocation tool. They liked the fact that these crypto assets, in particular Bitcoin, was not correlated with other things in their portfolio, but they wanted to do it in a trusted marketplace that they were used to dealing with and was highly regulated. And so for that part of it, it made it pretty easy for us to think about then what that product design looked like, really creating the right size. So for us, that was a contract that would be more appealing to the institutional client at 5 Bitcoin. And really thinking about, how can we go, quickly enough, but also bring everyone along from an education standpoint. So, we're 2 years into this with futures, 3 years into it from the reference rate perspective. And we're seeing liquidity really grow rapidly, which is very exciting, and that demand from participants increase. So far in 2020, average daily volume is about 8,300 contracts. So on an equivalent basis, that's over 41,000 Bitcoin. This is up 116% over where we were a year ago. And so this continues to impress on me is that, with as crazy of a year as 2020 has been, is that there continues to be demand, and there continues to see this market evolution of attracting more participants to this. With the Bitcoin options launch, we've traded 32,000 contracts of that since launch, and, had open interest of almost 10,000 contracts. And so after being in the product development space for many years, those kind of statistics for a brand new asset class, really suggest to me that, there is something here. The market, this does serve a need. And, the key part for us too was just working with the CFTC, as Sidney, mentioned earlier, to bring something like this to market, which was very different. And I know from the initial conversations that we had with the CFTC, I was really impressed with the amount of homework that they had done. And I think that, to be honest, has really helped to evolve this marketplace as well, because we have a regulator that's curious, just like we and our customers are, to want to understand this space, better and better and regulate it in a very, safe way, using the rules that we have, but also working with market participants to understand, kind of what's next. And I'm sure we'll get into that more in our discussion today.
Yeah. And I'll be certain to share that good news with my colleagues who have met with a number of innovators and entrepreneurs in the fintech space. Sunena, at first glance, decentralized finance can appear intimidating for regulators and incredibly disruptive for the traditional financial services market. This innovation doesn't require any intermediaries. It relies on smart contracts. It's proven itself to be a virtual Mall of America, if you will, with $1 billion contract hub. We just heard Julie talking about that. So it begs the question, why is this a good thing for the market?
Yeah, I like the Mall of America analogy. I might have to borrow that from you. Listen, we are leaning in and learning and, trying to figure out how we can contribute to the DeFi ecosystem. And oftentimes, the retort is, isn't DeFi an antithesis to CeFi, right? And our point of view is, no, actually it's not, when we're building for the future, sometimes it's helpful to kind of look at the past and learn from the past. And the more I study DeFi, and again, one thing I'll say is, if you are somebody who's a lifelong learner or just insatiably curious, digital assets and DeFi is, kind of your best candy store, because there's always something to learn. There's always something new. So again, if that drives you, definitely start kind of leaning into these ecosystems, because, they're so multidisciplinary. There is never a dull moment. But kind of getting back to the point, I kind of look at history and, there's something really cool. Like, and I don't know how much of your audience might realize this, but if you think of the genesis of the brokerage industry as we know it, it all started about 40 years ago with a catalyzing event called the May Day event, right? And without getting into too much nuance, essentially essentially what that legislative rule change enabled is for the first time a massive transformation of Wall Street and kind of removing layers of, intermediaries and fixed pricing that created this fertile ground for a whole new industry to rise up, the brokerage industry, but the beneficiaries were the mainstream investors who could now actually access and engage with capital markets, which prior to that was not easy to do. You had to have the right connections on Wall Street or a big enough capital base, and the fees were pretty high, right? And come back now in 2020, where literally you can be trading on your phone at zero commission. So, we've really kind of leveled the playing field, right? And I think DeFi, if done right, the continuity of that ethos of breaking down barriers and democratizing finance. So from that vantage point, that's why it's exciting to us. And the way we really look at it is, the growth is remarkable. As, Sidney, Julie, and you've attested, I think the numbers, that I kind of refer back often to is it took DeFi over 3 years for over $1 billion to be locked in ETH. And just in the last 6 to 9 months, over $3 billion has been locked into ETH dedicated to DeFi. I mean, that kind of, proliferation of growth is astounding. So, you can't be ignoring it. The other reason we look at it is, it's the continuity of kind of the ethos of what we're doing, which is leveling the playing field for our clients so they can engage with financial services more, seamlessly. Second, you have to look at the growth, that you can't ignore it. And the point I often make to people is what we see as DeFi today might just be normal FI in the future, right? So it behooves, incumbents like us, to lean in, to learn, but also realize where is the right place to kind of engage. And the way we're looking at it is, we're part of a couple, critical communities, one being the DeFi Alliance that started out of Chicago, and they do a really good job of bringing together, traditional market makers and incumbents and match them up with a DeFi community because, we have an opportunity to share with them lessons that we've learned over the last 40 years in terms of, building for the infrastructure, education, regulatory guardrails, so they don't have to make the same mistakes we've made. And we have the opportunity to learn from them as they're really at the edges of technology and, figuring out new ways to create financial instruments that are more directed by code versus intermediary. So I think it's not DeFi versus CeFi. I think ultimately the end consumer wins when it's DeFi plus CeFi and us figuring out, what's the right way to engage. No doubt, this is still a very nascent ecosystem, and there's a lot of growing pains that we've already seen and will continue to see. But to your point, it's also helpful that regulators like the CFTC are leaning into it and learning about it. It's no different than the journey we all undertook with digital assets and Bitcoin just a few years ago, but I feel like DeFi is going to happen at maybe a much more accelerated pace. So while there's a lot to be figured out, I think it's important that, the right constituents are getting together and figuring out how we can collaborate and co-create.
Yeah. And Sidney, you've shared that Gemini affectionately regards itself as the fastest tortoise in the race. So as we listen to Sunena talk about bringing the right people to the table and collectively having the right groups together, hearing a phrase like fastest tortoise in the race could really go a number of ways. Can you tell us, Sidney, more about what that means and what's on the horizon for Gemini?
Yes, absolutely. And I do like that phrase. It actually sort of came up organically, I think, when we were talking before the panel on it. And it's absolutely something that we say internally. And as many of you know, Gemini is a crypto native firm. We were started by Cameron and Tyler Winklevoss back in 2015, who were early adopters of the crypto technology and wanted a safe, secure, and regulated place to store and trade their own crypto and to create an ecosystem. So for that reason, they actually partnered with, they sought regulation where it wasn't clear where it would come from, and partnered with the New York Department of Financial Services to become one of the first registered trust companies. And we continue to believe that, very strongly, that moving quickly to stay at the cutting edge of technological innovation doesn't require, cutting corners from a compliance, regulation, and trust perspective, that those are really at the core of long-term success. So we are very proud to be a crypto native leader in bringing investors and market participants to this really exciting technology, but in partnership with regulators that I think my fellow panelists here have alluded to. We have a SOC 2 certification. We've got insurance. We're really trying to bring all of the sort of regulated structures of the existing system that are very important for consumer protection to bear on a very exciting new technology that, as Nina just explained, has enormous potential to kind of democratize and bring down barriers. I love the analogy that you set forth. It's so interesting to think of these moments in history where financial systems that seem just like the financial system were democratized or were disrupted, and now you're just going to think of that as being an innovation. That's just how it is. And I imagine that will be the case with crypto as well. And picking up on Julie's comments about CME and where CME is going, I'm excited to discuss our plans with the CFTC, Gemini's plans with the CFTC. We are seeking registration as a designated contract market. Historically, we have been a spot exchange, again, registered as a limited purpose trust with the New York Department of Financial Services for many years. And that was the regulatory framework that brought sort of all of the New York banking law regulations to bear on our exchange and custody business in terms of capital reserves, cybersecurity requirements, consumer protection, et cetera. But we're now seeking this next step, and we're incredibly excited for all the reasons that Julie shared about the opportunity to bring crypto derivatives products to our customers, again, in a fully compliant way. And very much as a contrast to some of the overseas participants who are offering, unregistered, totally illegal offerings in the U.S. And the CFTC has actually taken action against some of those folks, which we certainly applaud, because we believe really strongly that this industry should be developing in the U.S. and in daylight. And Julie mentioned some of the statistics around the uptake of these derivatives products in the crypto space. And we've seen that as well. And we think that in order to continue to foster trust and utility in this underlying asset, which is this incredibly innovative technological instrument, we need to provide products that continue to allow for price discovery, trading strategies, et cetera, increased liquidity that you would see in any other asset class. And it's very early days, but we're really excited about, kind of becoming part of that ecosystem and becoming part of that effort to just create lots of different ways for customers, both on the institutional and particularly on the retail side, to engage with crypto.
Yeah. And Julie, we heard Sidney touch on some of those elements of market growth. Can you tell me about what CME is seeing in terms of the institutionalization of digital assets? Well, Julie, are you on mute?
Sorry. I think it's crazy to think about how quickly this, pace of adoption really has been, given that this asset class, didn't even exist 10 years ago. A lot of references today about, us really kind of starting all this in 2015. So, but I think sometimes people don't appreciate that, particularly for institutional users, these things don't just happen, and a portfolio manager doesn't just decide one day that they're, going to throw a new product into the mix. And so it really does come back to the education behind that, a lot of back testing and understanding and building of that comfort level. And, that's really what we've seen, as well as, they need to have a group of products. And I think the development of the overall ecosystem with, the spot exchanges that are, being run in a certainly above ground way is a key part of that as well. what we've seen in our markets is, there has definitely been growing balance among institutional users. So, it maybe started as some kind of crypto only, hedge funds and trading firms being in there more at the beginning when we launched. Now we're seeing far greater usage across a broader hedge fund base, as well as commodity trading advisors and asset managers. And I think that's just, due to everybody getting more comfortable, getting that approval. I think the best thing that you can kind of point to is really that large open interest holder data that the CFTC publishes, which we have just looked back a couple of weeks ago with the most recent data on October 27th. There are now over 100 large open interest holders in Bitcoin futures. And so that really, demonstrates that there are a number of users out there. Yet, the bottom line is this still takes time. And I think education, the building of the ecosystem is going to be part of that journey. But to, see that open interest at, 15,000 contracts and large open interest holders, that to me is the evidence that they're there. And then it's really up to all of us to continue to get to build people's comfort level. And I think there'll be more getting involved in the future.
Yeah. And Sanina, we realize that there is a balance between adopting new tech and proving to be a credible partner. And really, your margin of error is significantly reduced. We know that it requires organizations looking at the infrastructure and how we fit into those structures. You talked before about the importance of education, the role that metrics plays in that. Is there a way that we could also look at that education piece in terms of working with regulators as well?
Yeah, definitely. And, it's the reality, right? I mean, and I would submit that it's not, those constraints aren't just peculiar to large institutions like us. I think even when you talk to startups or, regulators or mid-sized companies, the reality is we are all working with a finite amount of, time, resources, and capital, and allocation of that in a way that, returns the best outcome is what, every leader is trying to do, right? And I think from a business perspective, we all also have to remember that ultimately we're in the trust business. Right? You could call it investing, and you can glamorize it all you want, but ultimately people are trusting you with their livelihood. And, I spent a great deal of time, I live part-time in Silicon Valley, and much to the chagrin of my tech friends, as I remind them, I am in the business of asking for permission, not forgiveness, right? As quaint and boring as that might sound, but, I'm not shipping a photo sharing app here. And as you said, the room for error is small, though I would argue these days you can't even, screw up a photo sharing app because there's bigger consequences. So I think we have to recognize the gravity of the situation. However, we can't use that as an excuse not to power forward, right? And as somebody who's led innovation for most of my career, it's actually surprising, but one of my anchor quotes that I hold near and dear to me is actually from Hemingway, and the quote about, slowly at first, then all at once. And we've seen that with all types of technology over and over and over again. So I think the mental model of we always have to focus on evergreen innovation, right? Doesn't mean, we have to jump into every shiny object that's coming our way, but we also can't be glib about, it's just for the kids or no one's going to care. It's just a small thing, because very quickly, and interestingly enough, it's not about the technology. It's often the consumer behaviors and preferences just shift so quickly. And I mean, we all have examples from our personal lives about how COVID, has changed behavior very quickly for a lot of people, and there's no going back, right? So I think, if we are close to those first principles, then it dictates, okay, how do we want to act? How do we want to execute? And for us, starting with education is like DeFi, right? Sure, at the first glance, you may think it's an antithesis to our business and what we do, but the more you learn about it, you actually realize, no, there's actually a lot of synergy, and this could be a very interesting adjacency. And frankly, that's how our journey into digital assets started, and extending that conversation with regulators is really important. And I know you didn't ask me to do this, but I have to say it. I think the work that the CFTC and LabCFTC you guys do through your open office hours is one of those critical items that helps incumbents. And I know a lot of the folks in the startup community, because we can come to you and stress test ideas before they're fully formulated or built out, and then getting ourselves into trouble. Kind of having that conversation earlier and the ability to pivot our roadmap or ideas is critical. And even internally, we found a lot of merit. In addition to my core team, we always bring in our BFFs from legal, compliance, risk, audit, privacy from day one, even when we're still figuring out what the problem statement is or what the potential solution might be. It does a couple things. Gives them a seat at the table and gives them the respect that, listen, we're not going to build something out and then say rubber stamp this. You actually have skin in the game. You get to participate in the process. And from their vantage point, now that they have skin in the game, they aren't just, looking, outside in. They're part of it. So they actually want to help you to get to that destination, but do it in a way that's scalable, sustainable, and ensures that client safety and soundness is, part of the DNA of whatever we're building. So I think having a strong problem statement is critical because it gives you credibility that you're actually doing something meaningful and purposeful and not just, theater, but following that up with education and being inclusive and bringing in all the right partners, including your regulatory constituents early on, I found, ends up paying dividends in the long term.
Yeah. And Sidney, I saw you nodding your head there. Did you want to chime in?
No, amen to that. I mean, first of all, to the comments about LabCFTC and what you, Shivon, and Melissa have done to create sort of an open door so that market participants can come and stress test ideas with you and bounce things off of you and help us sort of think about how to engage with the rest of the commission to collaborate. So that absolutely. And as the legal and compliance regulatory representative on this panel within a startup, I very much appreciate the ethos that exists here at Gemini, but that you've described about TD Ameritrade, where given how heavily regulated these products are, and given the newness and the dynamic nature of the regulatory framework, it is really important that not only regulators be involved, but the regulatory minds, legal minds within the companies be involved in product creation. And that's part of what makes my job so fun. So that was very much music to my ears.
Yeah, it seems like it. Julie, last week we read that CME unveiled FX market profiles powered by quant analytics. What can you tell us about the analytics that came out?
Sure. Well, it's really an awesome new analytics package that is built on the quant analytics technology. And so what it really is the first industry tool that allows us to compare FX listed futures contracts alongside the spot market. And we've talked quite a bit today about the importance of not just price discovery, but also, liquidity and transparency. And so through this FX market profile, users can see this alongside each other and allows them to really analyze their trade flows, calculate execution efficiencies, and really benchmark the performance that they're seeing in these markets versus, other alternatives. And, I think in general, we've seen huge demand from clients over the last few years, as well as regulators, just to better understand trade and execution costs. So we have a number of tools that are out there. And I think it's really the advances that we've seen in technology that have made, data more accessible than we've ever seen before. And it's also just accelerated across the industry and many industries, the use of analytics. I think that the challenge is like how to, contain the cost of obtaining all that data and storing all that data. It's become, burdensome. I think it's also been a challenge for regulators and just how are they keeping pace with that level of change and that sheer amount of data that's being distributed that needs to be consumed. And, that's where, we've continued to, apply innovation as well. And then I think, even as it related back to crypto market data, I remember when we were first talking about introducing it, and, the crypto team was like, well, that the crypto markets don't sleep, and this is a 24/7 thing. And all of the IT guys were like, but we don't do Saturday and Sunday, right? And you're just like, well, you kind of don't have a choice. Like, we got to find a different pathway here. And so, because it is an always on market, for us, it was, how are we going to distribute that market data? What solution are we going to come up with? And, I can't imagine, we're so used to those guardrails that Sidney talked about earlier. I think digital assets, are allowing us to kind of punch through some of those walls and kind of break through some of those orthodoxies. But I think it will go broader. And certainly as we've even looked at blockchain technology and done a number of proof of concepts with firms, the technology is the piece that always seems to work. And so we get it to solve whatever it is, the need that was identified. Yet I think that transition, because of the sound and safety that we all enjoy as part of the financial services industry, it's going to be, it's going to be the tortoise, I think. We're still going to have to see how that evolution works. I don't think it's going to be, fast in nature just because it's so significant. And in these cases, right, you really need the body of participants willing to kind of take that next step with you. So I think that's what, we're looking to the future about is, where are those things that the technology can solve for, as well as where can we kind of harness the needs that we're seeing with digital assets, to do some things that we normally wouldn't do. And so that's part of what makes this exciting, because it's kind of that momentum that my other panelists have talked about that pushes, our organizations in new ways, and certainly allows us to even work with our regulators in new ways.
Yeah. And it's interesting to look at that future and have that future perspective. Sidney and Sunaina, I would ask you, our first Empower Innovation session was focused on technology and innovation in light of crisis. What impact do you think the pandemic has had on the success of these innovative products?
I think many people have correctly noted that this pandemic is likely expediting a move to digitization that was already sort of an existing secular trend, but what may have taken 5 to 10 years is now happening in months, which for those of us who spend our time on crypto, is sort of a dizzying development, because the pace was already felt very fast. And now it's happening even faster. I think Sunaina mentioned earlier that there's this notion, or there's this sort of phenomenon that the pandemic has forced us in a very limited period of time to start collaborating and working in ways that didn't seem possible, but actually ended up being totally possible, and then there's no going back. So I think that spirit, that drive, that phenomenon has started to permeate the financial markets, or really, frankly, any other sort of business initiatives. And many industries are seeing this incredible transformation. And I think that, put simply, if you have the ability to design new systems and technologies today, you wouldn't rely on some of the back office databases and, kind of legacy ways of doing things. Julia just mentioned, closing on the weekends, were developed 20 to 30 years ago. And as more people recognize the benefits of crypto technology, we expect that there's going to be continuing ongoing information of how people access financial instruments, how those transactions are initiated and processed, and who the intermediaries are who are involved in help. You're already seeing it with the panelists. We're already experiencing it at Gemini, sort of a cutting-edge crypto-native firm. And we've talked about DeFi, and this is, of course, a particularly interesting way to watch. And I think Sunaina mentioned some of the dizzying statistics around the growth of that space. I mean, we're going to see so much innovation in allowing people more agency and automation and how they transact. And, this kind of spirit, this and change that the pandemic has sort of thrust on us is going to continue to permeate that space. We think, in the financial space that we will not avoid regulation and should not, but regulation will adapt, and obviously through partnership and conversation with private industry to recognize the new nature of certain types of intermediaries and to ensure regulation is targeted at mitigating those identifiable risks. Squeezing the innovation out or into historical regulatory boxes is probably not the approach, but rather, that focus on the customer that both Julie and Janina mentioned, that's going to be paramount, and we'll work together to make that possible.
Mm-hmm.
Yeah,
anything to add?
I'll build on the last point around the customer. If you look at the adoption curve of any new technology, there is a delta between, something being seen as novelty and then it becoming a necessity, right? In our own industry, we've seen that how, I remember just a few years ago, we were still debating within our organizations and our industry about how much of our tech budget should we divert from web development to mobile development. Because, smartphones were to play Angry Birds and Candy Crush. It was unfathomable that, we would be doing our banking and, trading, let alone living our lives on these devices, and how quickly that's changed, right? So I think, with any new technology, we start to see a trend where it shifts from being nice to have to need to have, to everyone's point, just to double click, COVID has been an accelerant. I feel like I need to take a shot every time somebody says that, but now I'm saying it. And, I think there was a quote on Microsoft's earnings call last quarter where Satya Nadella was saying that, Microsoft is a provider of these technologies to big institutions that usually aren't exactly known to be nimble and have a lot of built-in inertia. His point was, we are seeing, 3 years worth of digital transformation happen in 3 months, right? So that kind of tells you that we're starting to overcome that inertia from an institutional perspective. I think the other thing the organizations are realizing that is important and an important inflection point is digital transformation, again, isn't this nice to do thing that we can tell our shareholders that we're doing it. Now it's become an imperative, right? Financial services is not an island. Consumers who deal with us are also dealing with brands of all different types of, during, their day-to-day lives, and they're asking themselves, wait a second, ordering takeout on DoorDash or ordering stuff from Amazon or, using something like Instacart, like everything is so easy. Why does financial services have to be complex and complicated, right? And they're bringing those, as I call, liquid expectations. And the reality is they're not going to change for us. We have to skate to where the puck is going. We have to, adapt to the client behaviors and needs. The last anecdote I'll share with you is, prior to us all being grounded, when I was leading emerging tech, I would travel to China quite a bit to work with our tech partners and the fintech ecosystem. And I'm a Starbucks junkie, got to have my, Starbucks wherever I'm in the world. And, I would go to like Shanghai and, try to buy a Starbucks and, try to hand out my credit card and then look at me like, what are you, an alien? Like, the whole concept of taking something out of your wallet, let alone give them cash. Like, try giving somebody cash there, and they literally kind of roll their eyes,
right.
Because they kind of leapfrog. They were living in this world of QR codes and digital wallets and digital payments. So I think one maybe silver lining of, this crazy adventure called 2020 is we as consumers have been forced to adapt. The institutions and the infrastructures have had to adapt. And hopefully this will be that big leapfrog moment, and kind of, I think we will revert back to some level of normalcy. At the end of the day, everybody does want to gravitate, but I think there are certain things that we've all touched on that there's no going back. If anything, it's going to snowball even faster.
Yeah, I agree with you. The acceleration that has been seen in 2020 has kind of forced us to propel into areas whether we were prepared or not. And just as a last question, I would be remiss not to mention that this panel includes incredibly accomplished women. And it's a pleasure to see that in the financial services industry. It gives me hope for future generations. I'd love to know from each of you what advice you have for women entering the industry today. And Julie, I'd like to start with you.
Yeah, it's definitely exciting, and hopefully in future events there'll be even more all-women panels. At CME, I think we've really been able to be kind of ahead of the curve in terms of promoting women into leadership positions, and demonstrated that increasing diversity is not just like a nice thing to do or the right thing to do, but it really is an opportunity. And so kind of linked to your last question, it pains me to see the data that's coming out about how women are leaving the workforce at a faster pace than ever. And so I feel like it's super imperative for all the men and women that are listening today to do something about it. And so in that sense, whether you're, a younger woman looking for opportunities, take the time today to write an email and reach out and ask for a conversation with someone within your organization that, is a role model for you, or someone that you'd like to touch base. All those water cooler opportunities aren't there anymore. And so you need to take the initiative. And I can assure you that people are going to be, more than likely very willing to sit down and have a conversation with you. And then if you're on the receiving end of that, this is your time, right? This is your time to be more flexible than you've ever been before, and open your minds, and we will get through this. But I'm afraid that we don't start making some of those critical connections, we're going to find ourselves at the end of all of this, really having to make up a lot of lost ground. And I don't really think any of us want that, right? We want to see this be a launch pad for even more diversity and inclusion in the future, but we all have our roles to play in that.
Right. Great advice. Sidney?
Yeah, it's a great question and a great acknowledgement. This panel reminds me of a Ruth Bader Ginsburg quote. When will there be enough women on the Supreme Court? When there are 9. When will there be enough women on the a panel about financial services? In this case, when there are 4. It's so fantastic to see, to get to connect with my fellow panelists and obviously with you, Shivon, and it's inspiring to see that kind of representation in a place where, in financial services and in crypto in particular, where it has not always been the most inclusive environment. Tech and finance are still, as Julie mentioned, working on diversifying and creating opportunities and space for all types of diversity, but particularly women. What I say to young women, in addition to Julie's great comments and suggestions, but what I would say to a young woman who is looking to build a career in tech and finance is that you belong here. For much of my career, I wasn't sure that I did. I was sometimes the only woman in the room, or the only woman on the panel, or the only woman, doing what I was trying to do, and I wasn't sure if I belonged. But now I know that I do, and I wish that I could go back and tell my younger self. So I will tell all the women who are trying to come up in this industry, you absolutely belong here.
Yeah, what a wonderfully accurate way to close out. And Sunena, I leave with you.
Well, first of all, major props to you and Melissa and LabCFTC for finding the art of the possible and bringing us all together. I know a lot of events talk a good game about having a diverse array of perspectives. Clearly, you guys are walking that talk, so just want to kind of give you guys a shout out on behalf of myself and the panel. I would say, just adding to what Julie and Sidney so eloquently stated, I think one is, as I mentioned earlier, if you are somebody who's just insatiably curious and all your life were chided for asking why, guess what? This is a perfect job for you. This is a perfect industry for you because it's at the nexus of finance, tech, and policy, and this is still in the build-out stage. So there's always so much to learn. Sometimes it's daunting. Sometimes it's thinking, somebody just give me the answer. But, if you like figuring things out, this is the place to be. And, very early in my career, I was fortunate that a mentor, I was working in iBanking, and I was kind of debating if I liked iBanking or wanted to kind of get into fintech. And I was kind of getting these conflicting opinions. And he pulled me aside and said, first, tune out all the noise. Second, he said, chase competencies and experiences. Then the superficial things like titles and, all the other things that we tend to chase, those will fall into place. Every time use the litmus test of, will this help me build new skills, new experience? new competencies and expand my breadth and depth? If the answer is yes, everything else will fall into place. And I have to say, that advice has served me well, and hopefully I can pay it forward. And, that's the other thing I would say. It doesn't matter where you are in your career journey. I used to think when I was early in my career that, I always want to pay it back, but I'll do it when I get there. Well, guess what? There is no such thing as a destination. It's a perpetual journey. So, be humble. And realize that wherever you are today, it's because you're standing on the shoulders of many, many, many giants before you. So it's never too early to start paying it forward in any way that you can to help somebody else. And, and grateful for all of the folks that have taken a chance on me, and grateful to you guys for being fellow panelists and for hosting a session that's so engaging.
Yeah, no, fantastic advice. For our audiences, you heard it here first. Make those connections, chase experiences and competencies, and know that you belong at the table. I think that's fantastic advice. I am so sorry that we have to wrap up. I want to thank my panelists, Sidney, Sunena, and Julie, for really intriguing dialogue around digital assets. You've given us a lot to contemplate on what's next and what's new in financial innovation. At this point, I'd like to segue to my colleague, George Harada, for a tech talk on the topic of innovation and risk.